And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
Good morning and welcome to the Hump Day edition of the Real Investment Show. A little bit sleepy this morning. Stayed up too late last night watching the debate. Much better debate than the previous one, so that was actually good. But very interesting, of course. Lots of talks about policy and what that means potentially, for the economy. This morning, futures are pointing to the downside. Again, and this is really more about what's happening between Israel and Iran right now than anything else. But also, we did have some weak economic data out yesterday. ISM, et cetera, others showed some continued signs of weakness. Construction spending came in weak. That lowered the Atlanta Fed GDP, which was about 3%, lowered that to 2.5% yesterday. So that kind of real-time tracking of GDP certainly shows some signs of slowing. But this is kind of that continued debate that we have about economic growth, et cetera. Markets did sell off yesterday. We're going to have a little bit longer before the bell this morning, so I want to go through a couple of things with you. So we'll get to that in just a minute. But the markets did sell off yesterday. The futures are off again today. And again, as we've talked about previously, it's all about needing a catalyst. We talked about how markets were overbought, they were extended, deviations, et cetera, and that markets needed to have some sort of correction. And you just need something, you just need a catalyst to get sellers to show up. And as we kind of talked about on Monday and Tuesday in reference to the everything market, that's what you need is just, while if there's no catalyst, people will just kind of keep buying and buyers will continue to pay higher prices. But when something happens, that changes, and it can change very quickly. And so we're potentially starting to see some of that. And again, none of this is really surprising. We're getting very close to the election now. Today's October the 2nd, election right around the corner, about a month. So again, markets are still uncertain about, who's going to emerge victorious in this presidential election. What does that potentially mean by policy? And again, last night, with the vice presidential candidates debating, you got some more conversation about potential policies, and whether you agree with them or not is irrelevant. But that's what markets are going to be looking at. And they're going to be looking at, is it higher taxes? Is it lower taxes? Is it more regulation? Is it less regulation? Is it onshoring of jobs? Is it offshoring of jobs? Because each party has very different visions about how to get the country moving forward. Some are better than others. And so that's where, as a voter, you have to decide yourself as to what policies you feel are best. And the important thing to do is to look back at policies that have been done and say, did those policies work or not? Are my healthcare costs more expensive or less expensive since the Affordable Care Act was passed, right? So these are things that you can look at and say, okay, that type of policy didn't work. There has to be a better prescription for that. No pun intended. But that's, so as you get ready to go vote tomorrow, forget less about personalities and focus more on policy, because that's what the markets are going to be doing. And when it comes to investing, this is really what's going to be driving the investing boat for the rest of this year, really, and getting into early next year. Markets are going to start to reposition for what assets should perform the best. Now, speaking about positioning, Nike getting hammered this morning. It's down about 5.5% this morning after announcing they withdrew their guidance for their earnings and are postponing their investor day ahead of their CEO transition. So something's certainly not going well right now with Nike, under a lot of pressure this morning. So that'll be a bright red spot in today's market. But again, the whole market looks to open lower right now. The S&P, right now futures, now this can change as we get closer to the opening of the market, but futures on the S&P right now are down about 20 points. So let's talk a little bit about what you need to know before the bell. Like I said, there's a couple of things going on I want to touch on in particular, relative to the markets today. Some of it we talked about yesterday, but some of it today. again, yesterday the markets did sell off, and we had this kind of first initial pullback that we've had. The markets had kind of peaked out over the last few trading days. You kind of start seeing this, kind of this rounded top that is kind of typical of an exhaustion move in the market. So once markets have moved so much that buyers get exhausted, and markets kind of start to round off a bit, and so that's how you get these corrections. And we saw this back, previously, each time. So you kind of see these kind of this stalling of the market. It's like throwing a ball up in the air. It will go up very rapidly, then it'll start to slow down on its acceleration until it pauses and then comes back down to earth. Kind of where we are right now with the market. So yesterday was the first kind of crack that we saw, and of course that was off the back of this Iran-Israel escalation. That's continuing overnight, with Israel now vowing retaliation back to Iran's retaliation to the first retaliation. You get it. But watch out for this 20-day moving average. That's going to be the first test of support here for the markets. That's going to potentially set up a little bit bigger decline. And again, the 100-day moving average is kind of the running support line right now. So it is possible that over the next couple of weeks, we could see this market kind of trade lower. That's entirely possible heading into the election. Now that would potentially be a good thing for investors. We're very close to triggering a pretty elevated MACD sell signal. That would suggest also a bit lower price action in the markets. And we're starting to work off some of that overbought condition that we've talked about. So again, a week or two of kind of either sloppy trading, sideways trading, or a bit of a correction will kind of alleviate those conditions as we move into earnings season. Buybacks, of course, are pretty much blacked out at the moment until the end of the month. So that correctional process in October, if we get it, right, if this correction continues and we can work off some of this kind of overbought condition, that'll be a good setup for investors to put capital to work moving into the end of the year, as we should get a kind of year-end rally post the election. Yesterday, we had touched on the fact, and this was really kind of early in the morning, but we touched a little bit on crude oil prices. And again, crude oil had a very, very big jump yesterday. And we discussed previously that crude oil was very oversold, had come up onto a buy signal, and that because there was a lot of shorting in that market, it was kind of really primed for a bit of a reflexive rally. We kind of targeted out 73 on that move, and we're almost there already. Just 2 days, we went from basically about 67 to 72 yesterday. So again, won't be surprised to see oil a little bit up more again this morning, but we're going to start running into resistance here between 73 and 76. So if we can't clear the 50-day moving average on oil, that's going to potentially give a bit more oomph to oil prices heading into the end of the month. But again, this is all going to kind of revolve around if there's a very quick de-escalation of what's going on between Iran and Israel, we could see that kind of move kind of fade here quickly. So again, we've been holding our kind of energy positions as of late. We had trimmed them back previously, still holding onto those, but again, now those are starting to perform well. Energy did very well overall in the markets yesterday. Volatility also just is interesting here. Now, again, we have to look at this at a pretty short-term basis because, again, there's such kind of big spikes. But we had this very big spike in volatility back in August, and this was the whole Japanese yen carry trade blow up, and of course that very quickly faded, and we went right back down into kind of normalcy for that. Interestingly enough, over the last couple of months in particular, volatility's been very slowly kind of rising here, and now it's been very quiet, but even though the markets have been pretty complacent, we've had this kind of very gentle rise in volatility kind of coming up here. So again, we're trading right around 1945 on volatility, and this is typical of what you can see before you get a short-term correction in the market. So this is just kind of another indicator that with kind of this rising volatility in the background, we could see a bit of a correction here. That's what you need to know before the bell this morning. We'll come back, we'll pick up with Danny Ratliff on The Real Investment Show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA Advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So yes, Michael in my chat says you missed that a couple of hours ago Hezbollah escalated. I know, yes, they are. This is going to be escalating the escalation of the escalation, and this is going to weigh on markets here short term. As I was saying, is that particularly with oil prices, those are very sensitive to geopolitical events. And again, oil prices had the biggest short position in like the last 5 years on oil prices. So again, seeing this reversal in oil prices is not surprising, again, given the events that's going on. But this is also, as I've been saying, for a while, is that in a market where, kind of bullishness presides and markets are just kind of going up every single day. You've got a big surge of global liquidity that we talked about yesterday. In the everything market, that's boosting asset prices. And what you need, and again, as we were talking about yesterday, it's a market. So no matter what your thesis is probably wrong, because at the end of the day, it's about money flows. And it's always about buyers and sellers. And at some point, you just need sellers to say, hey, sellers go, I want to get out right now. Now I want to get out. And so they start to want to sell. And buyers go, well, I'm not buying here. So that's how you get this contraction in prices. And so we'll see how this kind of works out over the next few days. But I do think there's some downside risk here in the short term over the next month. The stuff that's happening in Israel and Iran will get resolved, as it always does. And this will die down and then markets go back to normal. That should happen all before the election, most likely. And between November and December, you should get a reflexive rally into the end of the year. Now, once we get beyond that, who knows, right? Trying to even predict more than a month out is pretty difficult for markets, but that's why we just try to navigate things the best way that we can. And so we'll work through this process and keep a watch on the headlines and see how markets respond and go from there. Outside of that, though, again, we also have the port strike. That's obviously all over the news right now. Here in Houston, where we reside, we move about 1 million TEUs a day So, I mean, it's a lot. It's a very, very busy port. And in New York, New Jersey, twice that amount. It's just, just a huge amount of cargo containers that come in and out of these ports. So, again, that's going to affect everything from imports of automobiles to food to electronics to think about all the things that we import and export that all goes through a dock somewhere. So, again, it's just a very, very important thing is going on. But this isn't the thing. Right. And so if you're looking for the thing that's going to, cause inflation to come surging back or to cause a major market crash, this isn't it. It's about $5 billion a day that goes on inside of a $27 trillion economy. So it's a very small impact. It's an important impact. Don't get me wrong. It's an important impact, and it is going to affect things in the short term. There's going to be shortages of products and goods depending on how long the strike goes on. If it's a very short strike, it's not going to affect much. If it's a longer strike, if it goes a couple of weeks or a couple of months, there's going to be an economic impact from that because, again, the length of the strike will be important. Near term, it's not that big of an impact. Longer term, it will become a larger impact to the economy. Right now, companies had already stocked up on a lot of inventories ahead of this strike. So again, we saw a lot of inventory building ahead of the strike. So companies have a little bit of breathing room right now for the strike to go on. Now, but again, if the strike outlasts the inventory build, then you're potentially have more problems economically. But again, another potential catalyst that we'll be paying attention to relative to the markets. But again, not a reason to go hide in the bunker, right? Sell everything, go to cash. That's not the case right now. In fact, markets sold off yesterday morning and rallied back pretty strongly in the afternoon. So again, it's just take these things kind of day by day with your portfolio, manage the risk, and we'll just kind of watch the technicals. The technicals will let us know if this is going to become a bigger deal and we start taking out major moving averages, then we'll know that we need to start becoming much more defensive. Again, short term, we're very close to a sell signal. So again, looking for a bit of a pullback here. Again, we've been expecting a pullback here. So now we're starting to get the right setup for a pullback here going into the election. Morning, Danny. How are you?
Good. Well, I think this is one of those deals that there's reason to be concerned. That the narrative is certainly out there. This can't go on for too long anyways. You have the Taft-Hartley Act that's going to require them to go back to work after a couple of weeks if this goes on that long. It seems like they've got their heels dug into the dirt. But it's to be seen exactly what happens here. The bigger thing will be like perishable goods that you're not going to be able to get out. That's going to be the things that are likely going to be, more on a shortage, and you're not going to be able to get as quickly. But, I think there's also, if you're looking from an investment standpoint, there are probably areas that will do well. Like look at FedEx, UPS. These guys are probably...
FedEx isn't a great example
Well,
to release earnings report.
Companies similar to this.
There you go. Amazon.
Yeah, they seem to have that supply chain and logistics figured out. But it is a concern. And if it goes on for a long period of time, the biggest question I'm getting right now is, what is this going to do to inflation? You look at yields have popped a bit. We've been expecting that, as we've been talking about for the last several weeks. They've been very overdone, and we should expect a bit of a pop in yields. And we saw them drop a bit here over the last couple of days. They're beginning to creep back up. And so I guess the moral of the story still is kind of like what you're mentioning. Technicals will let us know what needs to be done. I don't think any knee-jerk reactions need to be made at this point. Certainly a lot of information coming out at once, right? Geopolitical risk, what's going on in Iran and Israel, what's going on here. You mentioned it. Companies have known about this, been really stockpiling inventories prior to this occurring. So it may not be as big of a hit as what we'd expect outside of maybe the perishable goods, things that you just can't keep on the shelves. And then, what's to be seen is how long does this physically go on? It seems like the Teamsters or these guys, the longshoremen, they're ready to go from what they say.
They are. The only kind of bad look is the guy that they've got kind of vocalizing their whole thing. He makes $900,000 a year, and he's saying we need better pay. Yeah, and I'm like, dude, you make $900,000 a year.
Guy drives a Bentley, and he's got a 76-foot yacht, talking about people making too much money and they need to make more. But I guess that's the type of guy maybe they want representing them.
Yeah. Well, it's a union.
Yeah. Exactly.
That is kind of funny.
Have you gone back and done a little due diligence on him?
No, I have not.
Just there's a whole lot of extra stuff. He may make Jimmy Hoffa look good.
So, jeez.
Just put it that way.
There you go. All right. So, but again, kind of the key points here is look, just take this day by day. Again, we kind of get into these spates of, some event arises and it becomes the main focal piece of the media or whatever it is. But again, as we've talked about before, this is what we're talking about. And this is what we've been talking about over the last really kind of month or so, is that markets are doing fine, right? And it's, prices are going up. Everything is great. And then something's going to happen where it changes that narrative, at least short term. But again, this doesn't mean that we're now going back into a major bear market or a major correction. These aren't the type of events. This will get factored into the markets fairly quickly. People will go, okay, the impact from this is going to be roughly, a tenth or 2/10 of a basis points of decline in GDP. How does that impact earnings? And then what companies are going to benefit or not benefit from what's going on in the economy? So markets are going to make these adjustments very quickly. I should say computers are going to make these adjustments very quickly in the markets because, there's just so much data out there. All that data is getting fed in, and the markets are going to start pricing for the outcome of that event. Now, again, as I said, we're about to trigger a sell signal. We should get a correction here. But again, that should be fairly contained somewhere between the 20 and the 50-day moving average. 100-day moving average is probably the outside realm of that correction going into the election, and then we'll kind of figure it out from there. But markets are going to reprice here pretty quickly. Again, we're going to get some more selling today. Kind of watch the action across the board. I thought it was interesting yesterday. If you kind of look at the heat map from yesterday and kind of what was going on, energy, obviously the bright green spot in the overall market, but technology was, kind of flattish. It wasn't deeply red. Markets were down about, 60, 70 basis points at the end of the day. Meta was actually green. Salesforce was actually green yesterday. Defense stocks, obviously, because of Israel and Iran, RTX and Lockheed Martin were green. But most everything else was just slightly down. It wasn't, there wasn't big, bright red spots, kind of all across the market. So we'll see kind of what happens. Again, Nike today will be a big, bright red spot because of them withdrawing their guidance. That obviously sends a message to the markets that something's not going well there. But again, overall yesterday, there was not really any sign of panic selling anywhere in the market. So again, just from a portfolio management standpoint, let's just kind of work. Let's kind of keep emotions in check. It's easy to kind of get kind of over our skis here pretty quick, but just kind of keep emotions in check, and we'll just kind of deal with it as it comes, and then make some adjustments as we go along.
Well, and all eyes are certainly going to be looking at earnings here coming up over the coming weeks as those start to ramp up. We're going to get a lot, and I think the biggest thing is going to be forward guidance. Like you mentioned, Nike pulling their forward guidance suggests that there's something else out there that is troublesome to them.
Yep.
And whatever that may be, I don't know.
Well, the thing about Nike, it's consumers.
Yeah.
Right? FedEx is consumers. It's economy. So there's obviously starting to be, and we're starting to see this in more and more of the consumer kind of stocks in general. We're starting to see a lot more talk about slowing consumer demand, which isn't surprising, right? Because of what's going on with the economy and higher prices and wage growth. But we are starting to see a lot more talk, even from Walmart and Target, as an example of slower foot traffic, in stores. So come back, pick up with after the break. Social Security could cost a millennial couple nearly $1 million. Social Security can do that to you. Daniel will talk about when we come back from the break. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources resources, and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
I grew up in this little bitty town called Lake Jackson. This town was so boring. They named the streets this way, that way, circle way, anyway, and which way.
The Real Investment Show podcast.
There wasn't a lot to do. So on a weekend, everybody would kind of get together and they would drive to Pearland to the flea market. The whole fun of it was trying to negotiate so you could leave with somebody else's piece of crap that nobody wanted. And you say, I got a hell of a deal on this thing. I chewed the guy down to $8 on this rusted wheelbarrow that I bought.
At realinvestmentadvice.com.
I'm going to go home and spend $30 fixing it up. But hey, I got it. Cheap.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So, interesting article this morning about Social Security. You know, Social Security is one of those ongoing debate issues that everybody wrestles with because, again, we see the reports from the Social Security Board of Trustees talking about the lack of funded status and a lot of these programs. You know, it's always interesting to me, Danny, that we always hear these reports that Social Security is about to run out of money, but we never hear that welfare is about to run out of money. I just always thought that was interesting. But the Social Security is, you know, it's on the brink of having to cut benefits because there's not enough money. And so there's lots of conversations about how we need to fix these problems. But again, this is this ongoing debate. Nobody has a solution. Well, actually, that's incorrect. Everybody has a solution to fix Social Security, but nobody wants to implement it because everybody that would want to actually make the changes would have to get elected. And if you try to make the changes you won't get elected, right? So nothing ever gets done with Social Security because nobody wants to basically have to experience the pain of whatever it would take, raising Social Security, retirement age, et cetera, in order to fix the problem with Social Security. It's fixable. Danny's talked about this numerous times. We can fix Social Security without major changes, but again, it's just not an electable platform. So everybody just kind of it's like that one person at a party that nobody wants to talk to. Yeah, that's Social Security. So like, yeah, just ignore him. He's in the corner over there. Just leave him alone. But Danny, this was an interesting article on Market Watch this morning talking about. I'm sorry, Barron's. Apologize. talking about how the Social Security shortfall could cost a millennial couple nearly $1 million.
Yeah, and so essentially what this is talking about is right now the Congressional Budget Office has slated that Social Security can run until 2033, without any problems or reducing any benefits. At that point, if there is no reform done, then you'll see a 21% reduction in benefits. And that's fairly substantial. And so as of right now, the average monthly Social Security benefit for retirement beneficiaries is $1,920. So you take a 20% cut on that. That's not chump change, right? We're talking about $400.
Yeah.
And so that's every single month. So for the average recipient, we're talking about $4,800. So this is an issue, and it's one that we're going to continue to hear about. Social Security is, number one, not going away. The problem between Social Security and welfare is they can pull from many different sources. Mm-hmm. Social Security is really just based on payroll. So how many people are working, what type of income they have, what are they putting in? And so that's that 6.2% tax that you're getting for Social Security and Medicare that, if you're making over a certain amount, you will actually get a pay raise. So there's lots of small ways they can tweak this, but they're always going to upset someone. And so it's going to upset somebody in the younger generation. It's going to upset somebody in the older generation, depending on how they do it. The last major Social Security reform was 1983. We are long due for some changes. And back then, we didn't have the demographic issue that we have now. We have a much worse demographic issue at the moment. And
and I think that's the key thing, right? Back with the last time we made reform was 83, but since 83, we've added a lot more people to the Social Security, added a lot more groups that can actually get Social Security benefits, right? That's
right. And so the struggle here is, and so what this article does, I'll put it here in the chat for you YouTubers out there. If you don't already, go to The Real Investment Show, hit the like button, subscribe. We will, lots of great people in there bantering. But so essentially this was saying if you have a 38 and 40-year-old couple making $175,000 a year, they would lose, if this benefit was reduced, and it's stuck that way, basically $908,000 over their lifetime. So if you're going about your financial plan, what do you do? So we know a lot of people that say, hey, take Social Security out. I don't even want to think about it. I'm going to assume it's not there.
That's what I do.
Well, great. But guess what? You're going to have to be a really good saver because most people don't have pensions. They don't have other sources of income outside of what they're building. Now,
I'm married.
So you're going to work forever is what you're saying.
Yeah. There's no saving going on.
Yeah. Okay.
She ensures that.
Yeah, we know better than that. So I hope she's listening. There's going to be lashings at the Roberts household when he gets home.
That was last night.
Okay.
I forgot to take the trash out yesterday. I'm not used to the new schedule, the new house. The days switched. My trash days used to be Monday, Thursday, and now they're Tuesday, Friday. Totally forgot yesterday was Tuesday.
And she's like, what are we going to do?
I know. It's like, of course, she's still unpacking. So we've got, and Tuesday's heavy trash day, right? So yesterday my garage is like half full of empty moving boxes. And yeah, they didn't get put out yesterday. So yeah, I was, you were
in the doghouse.
I was in the doghouse last night. I had to almost sleep on the boxes. So
I made my way out to the street yesterday last night, so I'm good. But yeah, I certainly know that.
Anyway, sorry to interrupt.
So we're talking about trash. Social Security. But so the average couple who makes $175,000 today. Now listen, that's way over what the median average income is, right? Median income is like $74,000 right now for a couple with, 2 children, so a family of 4. But this couple would have to save $114,930 today, or $244 biweekly pay period, right? Assuming a 6% pre-retirement return and a 5% return in retirement. Now, I do love one thing, Lance. Mm-hmm. They didn't throw some like 12% number out here, the rate of return they'd have to achieve to actually offset the potential reduction in benefits. But you've got to think about it in a couple ways. Number one, let's assume Social Security goes away. What will happen? I mean, there are so many people that can't make ends meet today. Look at credit card balances. Look at what's happened with inflation. Think about all the things that are tied together. And so essentially, as Richard would say, we would be stepping over people in the street. We would have a significant and even more severe homeless problem than we have right now. Now, on the other side of this is that let's assume there is a reduction in benefits. What else happens? Is that inflationary or is it deflationary? I mean, we could probably argue it's deflationary because now people really can't pay for things.
Right.
And so it may not be as big of a hit as you would think. Now, I don't want to see anybody go through that. I do believe that something will be done. They will likely take it down to the ninth inning and with 2 outs and get something done.
Yeah.
And it's unfortunate.
But that's how look, let's just be honest. That's how government operates, at least this government. And by the way, when I say this government, I don't mean like this government in the last 4 years. I mean like this government over the last 40 years.
In general.
Really not since, really post-Reagan, the government has just become reactionary. It's not proactionary. So everything is, we have to wait till the last, great example, right? There was just this big hoo-ha over just a couple of weeks ago because they had to pass a continuing resolution to fund the government through December. We haven't passed a budget since 2000. Since Obama took office, we have not passed a budget. We have been living on continuing resolutions because all we do is just kind of kick the can down the road from one spending bill to the next. Of course, we increase spending by 8% a year every time we do these continuing resolutions because of baseline budgeting. But, this is the whole point, right? If you can't pass a budget, how can you plan for things like reforming Social Security or planning for economic expansion, et cetera? Because all you're doing is just reacting to every crisis that comes in at this point. And this is where we've gotten to. So this is why we don't have really effective government at all. It's just whatever crisis hits the fan, that's what gets the attention at the moment.
No, that's right. Well,
and to my point, Social Security is going to be, nobody's going to solve Social Security until it's like, oh my gosh, we're bankrupt. Now we got to fix it.
Well, why would they? And why would they ever actually do a budget? Because then you have to hold them accountable and you may actually have to cut things. I mean, that's easy. Oh, yeah, we're not going to worry about it. We'll just make some more money out of the middle of nowhere. But so, we were talking about Social Security and how it's taxed, right? So currently, if you're employed by somebody, you're paying up to 6.2%. That cap is $168,600 for 2024. If you're self-employed, you're paying the whole amount, which is 12.4, so double. Now, the impact is significant. There are a handful of small ways that it can be corrected, and I do believe there will be something that corrects this, or there'll be some type of major reform. I'm just not confident of when it will happen. Each and every year, we get a handful of bills that are thrown out there, and they act like, "Hey, look what we're doing," and nothing comes to fruition. I mean, I probably talk about this 2 or 3 times a year, easily. But they can eliminate that cap. They've talked about that. In fact, that was in the last tax proposal. They said, "Listen,
or at least raise it. Raise it to $400,000."
Well, that's what they've talked about, right?
Yeah.
Raise it to 400, or you would say between, you keep this and then up to 400, you don't pay anything. Then above 400, you begin to pay again. But we already talked about who pays the major bulk of taxes.
Right.
Even last night in the debate, they were talking about, we're going to make sure the people who the wealthy are paying their fair share. We've shared that. In fact, we talked about it like 2 weeks ago, what those numbers look like. The wealthy paid the bulk of taxes. And
yeah, exactly. That's the one thing that Vance should have set up. Well, exactly what is their fair share? Because they pay the wealthy. The top 50% pay 97% of all taxes. The top 20 pay about 80% of all taxes. So exactly how much are we going to tax them?
I was praying they were going to fact check them on that. Be like, okay, let's fact check this number here. That would have been ideal because those numbers are out there. Go to Tax Foundation. Go to a number of different places. I can put that out so you guys can look at that as well. But go find a bipartisan, avenue that looks at these things, that crunches the numbers, and I think you'll be shocked. There are ways to fix this. It won't be today, but hopefully someday soon.
Yep. By the way, just go to our website, realinvestmentadvice.com, and click on the article on the examination of tax cuts. It's the second article on the blog at the website, realinvestmentadvice.com. Actually has that table in it about who pays taxes. Be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA Advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show. Brent, you can bring that chart up for me real quick. Just we're going to get off taxes here real fast, but this was a chart in that article that I just wrote about the examination of the tax cuts. So again, a lot of debate about tax cuts don't work, right? Cutting taxes don't work. But we just went through a whole examination of the Tax Cut and Jobs Act and showed the impact, economically, financially, et cetera, on the economy. All very positive from the tax cuts. But this was the first table in there, in the article, and it shows top 1% pays 25%. You add up, everything from the 50% mark up, that's 97% of taxes. The bottom 50% pay roughly about 3.3% of all taxes. So it's a very, very small amount. But again, taxes are always kind of the big question. And the reality of all this is there's an easy way to fix the tax code. Go to a flat tax, or you've got to reform the tax code, right? We all want to order about who pays what. But at the end of the day, if you want the rich to pay more in taxes, and we've talked about this before, you've got to reform the tax code, right? Don't hate the player, hate the game. And the game is the tax code. So if you're very wealthy, and again, people talk about, Elon Musk didn't pay any taxes. He paid like $11 billion when he sold his stock, right? But
it was the biggest tax bill ever.
People talk about Jeff Bezos. He doesn't pay any taxes. Well, again, we've talked about before. If you're the CEO of a publicly traded company and you get all of your compensation through stock options and stock grants, and have your wealth is basically your corporate stock, right? Amazon stock. They don't pay a lot of taxes because they don't actually have a lot of income, because the reason they have yachts and mansions and all this type of stuff is they go to the bank and they borrow the money against their stock. So that's a non-taxable event. So I can go buy all this stuff with debt, and the bank knows at any point all they got to do is just liquidate the stock to get their debt paid, right? So, that's the tax code, right? If you want Jeff Bezos to pay more in taxes, got to fix the tax code. Charitable write-offs, donations, all the other things, they go on, but there's consequences for that, right? A lot of the vast majority of your charitable contributions, your charitable foundations, these charitable organizations that do great work around the country, from everything from abuse to healthcare, all rely on the wealthy making charitable donations for that tax write-off. You get rid of that charitable tax donation, all of a sudden, most of your good foundational work that come from charities will go away because there'll be no reason to contribute to those charities. So again, there's consequences for actions. You may want the rich to pay more in taxes. They already paid, the top 1% already paid 25% of all the taxes. How much more you want them to pay? You want to pay 50% of all the taxes? Okay. But there's a consequence. Those are your job creators. Those are the ones that basically fund your employment. And this is always the very interesting aspect that people miss when talking about increasing taxes. Corporations don't pay taxes. They pass on the taxes to consumers. So if you raise the tax rate on corporations, executives, etc., all they're going to do is wind up passing that tax increase on to their customers through higher prices. They're going to cut labor. They'll offshore. They'll cut wages. All that gets passed through. Corporations and wealthy, they're the ones that are creating the jobs. They're the ones that own the companies. They're the ones that are your employers, unless they just inherited their money. But generally, the wealthy, and especially when you're talking about the top 1% of income earners, those are your corporate owners. And they don't pay taxes anyway, not directly. They pass all that through. So again, there's consequence. So all these things, they sound great, right? And this is the problem with these policy discussions that we have. All this sounds great, right? We're going to give free health care. We're going to do this and do this and do this other things. All sounds great. There's a cost to it. There was a comment in our chat talking about how his insurance went up 25%. That's the Affordable Care Act working for you. The reason your health care went up, and we talked about this back in 2008, 2009, 2010, we were interviewing doctors all across the country at the time, is that when you take people with pre-existing conditions and put them into the same pool as people without pre-existing conditions, your rate has to go up because they become immediate drawers out of that pool of assets. So you have to compensate for that. So rates go up. And so, this was all sounded great. We're going to insure the bottom 20%. Guess what? That bottom 20% of uninsured people are still there. We never got them insured. They never got on the rolls. So costs have gone up dramatically. The quality of healthcare has deteriorated. So we all complain about healthcare, but you can all go back to policy and making bad policy choices, which was what happened with the Affordable Care Act, is what has created this. But, and again, nobody talks about the billions of dollars that were spent of taxpayer money on healthcare exchanges that all went bankrupt.
Well, it's not only that. I mean, I think a lot of people are talking about homeowners, Lance.
Yeah,
but you're going back
too.
to, taxation seems to be the hot topic, right? People are, over and over, we need to pay our fair share. Well, here's what the government has done. And this is relatively smart, right? If you look at it, 46% of American population works for a small business. That's defined as a company with 500 or less employees. There are over 33,000 small businesses here in America. No, wait, maybe 33 million because you got a shell over a shell over a shell.
No. There's 30 million registered businesses.
33 million.
Yeah,
excuse me.
so there's 33 million registered businesses in the U.S. Only about 6 million, 7 million of them actually have employees. It's a very small number, and most of those businesses have 5 or fewer employees. So again, to your point, most of these businesses that are out there are, shells, trust, family revocable trust, blah, 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 that all need LLCs sitting behind them.
Yeah, but so on the chat, you've got a couple of people going after, say, the wealthy in the sense, say, well, I don't feel bad for them. Well, you shouldn't feel bad for anybody, but if you can utilize the tax code within its legal realm, here's what the government has done, I think that's good, is that they do allow for incentives for creativity, for creating a business, for purchasing real estate, for doing things that are going to spark the economy. That's actually good. So there's not that they're taking the risk that other people aren't, but they're paying their fair share in many other ways. I mean, none of these things are easy. And the risk that the majority of them are taking is significant. Now, look, we can all pick on the top. That's easy. We can pick on Buffett. We can pick on Bezos. We can pick on Elon Musk. But a lot of these guys started from somewhere, and it wasn't the top. Not one of those guys was started from the very top. Mm-hmm. So I think I would envy that position. I'm not going to say envy because I don't think I want to envy anything, but I would We could switch spots.
Well, no, like Jeff Bezos borrowed $200,000 or $250,000 from his parents. So yeah, he had a boost, right? Because he was able to borrow $250,000 from his dad to start Amazon, and at that time he was just going to do an online book exchange. But nobody knew at that time that it would eventually blow up into what.
I remember that. We're like, this guy's nuts. What?
Right? Yeah, you remember that?
Barnes and Nobles are everywhere.
Exactly, and now Barnes and Nobles don't exist, and Amazon pretty much owns everything.
Yeah.
So, but again, that story of people that they came to America from other countries with not a nickel to rub together and created empires. We've written articles about this on our website as well. But just talking about their ability to use the capitalistic system to build wealth. And this is the important thing, is that we all kind of want to hate on the rich for being successful, but everybody has that opportunity. The only difference between a Jeff Bezos and you is that Jeff Bezos took a risk and was willing to go out and create something that he thought was going to work, and it could have failed. There's an 80% probability that Amazon would have failed in its initial form. But he adapted, he overcame hurdles and challenges and grew the business and made the right choices. So anybody can do that. So capitalism works, and it works well. You just have to take the risk. And we've talked about this before, is that if you want to build real wealth, working for somebody else isn't the way to build real wealth. If you want to build real wealth, right, you have to go out and start your own business. And that's been the great magic of the U.S. over the last 150 years, is the ability to go out and create a business and build a lot of personal wealth for you and your family.
Yeah, absolutely. I don't know. We can go down a rabbit hole here, Lance.
Go ahead.
Here's the thing. At the end of the day, we all want, and we're in this society right now where everything is out there, right? And you see, if you get on any social media, everybody's going to show the best of the best. If you go see somebody on social media and then you go see them in real life, you're like, wait a second, what type of filter was actually on here? And the same thing is, right, they're showing the best of everything that they can. And the problem is that we can get down a rabbit hole and think, oh my gosh, I've got to go do this. What you need to do is put your head down, probably turn social media off and everything else, and get to work. And unfortunately, we're in this environment, this day and age, where everybody wants to do as little as possible because we have to have this work-life balance. And while I agree with that, and that is one thing that I'm very big on, I think we all are here, but we all bust our tail. And I'm not saying we're wealthy by any stretch, but we're striving to do what's right for our clients. And if we can do well along the way, I think that's great. And I think that is where so much is lost, that people expect it to be handed to them. The government has created an environment where many people are paid to stay home versus go to work. And that's an issue.
That's right.
We got to find a better way where we need to educate, employ, we need to empower, we need to make sure that people are put in positions to succeed if they want to.
Yeah,
Not everybody can. Not everybody has that in them.
Yeah, out of 330 million Americans, I'm still trying to figure out where the 100 million are that don't show up on the rolls for employment. Just saying.
They're kids. They're elderly. Yeah.
So there's a lot out there.
Yeah.
Oh, and that's just the working age population, by the way. All right, wraps up the show for the day. So be sure to get by the website, realinvestmentadvice.com. Tomorrow, Michael Leibowitz will be here. We'll talk a bit about his article that's out today on the website, talking about crystal balls and the importance of forward-looking analysis. So we'll get with that with Michael Leibowitz tomorrow right here on the show. Have a great day. See you then.